What is up, my friends? Welcome to my channel. And here's a quick update on my portfolio. We're currently above the $250,000 mark and still selling covered calls on the Nasdaq. But of course, unfortunately, because the Nasdaq has risen so fast, as a matter of fact, in the past week so far, the Nasdaq has just made a really great comeback. It's currently up 6.77%. And my average cost currently is the $6.95 and 72 cents. But of course, unfortunately, I sold the call at a strike price just above my average cost when the market was down. So I will be allowing this call to expire, and unfortunately, I won't be getting any of this upside. So I'm going to be not getting a lot of this upside. That's why you see this kind of just this morning it was up here and then it just dropped off, because I've capped myself basically at this level. So even tomorrow it will not rise above this level. So we'll see what happens tomorrow. If this rally continues, it may continue, it may go up higher. Let's look at the past high. So could it reach this high tomorrow? Well, who knows? It might continue to go up, or it might go back down tomorrow. So who knows, right? But it's been a very strong rally since the downturn right in this area. So we'll see what happens for tomorrow, and my call expires tomorrow, so I won't be in cash until Thursday morning. So on Thursday morning, more than likely I'll be in cash, and I'll have this amount of cash right about here, because I'm pretty much capped. My upside is capped at this level here. So I'll have that cash, and more than likely I will be selling a cash secured put. So if we look at a cash secured put right now, I'll probably be doing a daily one by Wednesday, which I believe, or actually Thursday, which would be the 6th, I believe. Okay, so a cash secured put on the 6th currently, I would probably be doing a, let's see here, that's for today. So obviously I'm not going to be able to do that one. This would be for Wednesday. I'm not going to be able to do that one, obviously. This would be the one that I would be able to do once that call expires, and it's going to expire out of the money. And I'm just going to be receiving a premium. I will receive a premium of close to $500, but I will be losing all that upside. I'll show you guys right now how much of that upside I'm going to be losing. But on Thursday morning, depending on what the price is, of course, I will be selling a cash secured put. So I'm thinking, depending on where the price is, I'm thinking about maybe doing like a 721. If the price is 722, I'd probably go with the 721, and we are doing 3 contracts. So there's the potential to make at least $1,000 in one day. That is possible. Now, it may be more, it may be less on that particular day, but we'll see if we can make $1,000 in one day. Hopefully we can. But let me show you guys just how much upside I'm going to be losing here. Okay, that's like the hard part of this selling covered calls, because you're selling some of your upside. And by the end of Wednesday, I'll be keeping all that premium, which is only $500, but I will be losing all this upside. So according to this here, I am making the assumption that I will not receive all this upside. If we calculate it, I'm selling at the 696 strike price, 300 shares. So as you guys can see here, it's currently at $216,675 is the current value or the market value of 300 shares. So after I did the math, it's about 208,000 and some change. So I will not receive a lot of this upside. So that's the downturn of this. So I think it's actually this number right here, that $8,342 by tomorrow evening. But depending, of course, on what the price does tomorrow. So if the price goes even higher tomorrow, then I will lose even more in appreciation. Now, if the price starts to go down tomorrow, then of course the person on the other end of this contract is going to start losing some of that appreciation, and depending on how far down it goes, but who knows? I don't know. Who knows what's going to happen exactly? So that's the risk of selling covered calls. Now, there is a way to, I guess, also participate in the upside when you're selling covered calls. One way to do it is to sell a long call. So if I would have sold a long call here, if we go to trade, and if we go to a long call, and say you go about till the end of the year, a long call to the end of the year, which would be fairly expensive. But let's take a look at that. Let's say to January the 15th. If I were to sell or actually pay for one long call at the 720 right here, if I were to just buy one long call, that would cost me $5,900. But basically, you would get the performance of 100 shares, right? So it would almost be like buying 100 shares, but you're not actually buying 100 shares. You're just like, you just have the performance of 100 shares. So if I had the performance of that extra 100 shares, then I would have somewhat participated in this rise. And that would only cost $5,900 to participate in this rise. But I don't own a 100 shares as a long call, so I didn't. Another way to do this is potentially just to hold, like QQQM, just buy and hold QQQM. So if I were to buy and hold QQQM, I would have participated from this this rise, and then just sell calls on QQQ. That's another way to be able to participate or be able to capture some of these gains. So it's a lesson learned, right? I'm not gonna get any of those gains. Now I do have some cash. If we look over here at my buying power, I have about over $44,000 worth of cash right now. I'm not using any margin whatsoever. So if I would have used that cash to buy QQQM and just hold QQQM and then sold calls on QQQ, then yeah, I would have captured some of this upside. Not much of it, of course, because they're not, right? QQQ is more expensive than QQQM, and you would have to buy an equal amount of it for it to be equal. But I'm not able to buy an equal amount. Now I would be able to somehow kind of like own 300 shares by doing a long call, like I showed you, a long call option. But of course, 3 contracts in a long call option would be like about $16,000. Now I could do that and have it expire until the very end of the year. And so as long as the Nasdaq continues to rise, that long call will eventually make money. So if we look over again at I've been thinking about this just to be able to participate in the growth of the Nasdaq and not just do options on it, but I haven't really decided if I'm going to do it or not quite yet. So here it is, a long call to be able to participate in the upside of the Nasdaq. So of course, if you're going to buy a long call, you might as well buy it for like about a year out or until at least the end of this year, which currently would be 164 days. And I guess I would do the 720. And if I were to buy 3 of these, that would be $17,700. So here it'll show you when you would begin to actually make profits on this. So first of all, to make any profits on this whatsoever, this would have to climb up to $779, basically $780 per share. After that, then you would start to make money. Okay, so anything above that would start to make you money. So I guess you wouldn't really capture the upside, really. I mean, not until it reaches this point. I mean, so probably you'd be better off just buying QQQM right now. If we look over at QQQM, here's a QQQM. Here's QQQM. So if I were to buy $44,000 worth of QQQM, how many shares could I buy? I'm assuming it would be more than 100 shares. Let's see, 150. Yeah, about 150 shares of QQQM. And if I were to buy 150 shares of QQQM, then I'd be able to participate in the upside of QQQ in the long term, as long as it continues to rise. If it doesn't rise, right, then I'd just be participating in the downside of QQQ. So I've been thinking about that. That's one way of participating in either the upside of QQQ or, of course, the downside, depending on what direction it moves. But of course, in the long term, I'm assuming that QQQ will continue to rise. And basically, QQQM is a copy of QQQ. If we look at the 1 year, 5 years, in the past 5 years, this is up 97.68%. If we go back to QQQ, it should be exactly the same. If we go to the 5 year, yeah, 97.36%. So it's basically the same thing, except for QQQM is less expensive, and but it basically does the same thing. So what I might be doing is I might be just selling contracts on QQQ, 3 contracts per day, and just potentially, dollar cost averaging into QQQM to be able to participate in the growth of the Nasdaq. So I might be doing that moving forward here. But of course, by Thursday morning, I will be selling a cash secured put on QQQ. And hopefully I can make $1,000 in one day, or maybe even $500 or whatever. Hopefully. And get the ball rolling here again and start making some money again. Because it looks like I am going to probably lose $8,000 of upside by, by having sold this call here, which I only got $1.58, but now it's currently worth $28.83. So yeah, it looks like I'm going to be losing this amount right here, $8,649, if, of course, the price of QQQ stays around this range. If it begins to drop tomorrow, then it'll be less, right? I'll lose less. If it rises further, then I'll lose more. But of course, that's how this game is, right? That's how this is in the stock market. You lose money, you make money, but hopefully you make more money than what you lose. So if you guys want to continue watching me either make money or lose money, I don't know what's going to happen. Please like, share, and subscribe. I really would appreciate it. Thanks for watching. God bless. We'll catch you in the next video. Bye.